Hey, what's up, everyone? Welcome back to a new week. Andy Cruz here in Business Development.
And Will Flores, Mortgage Heroes.
Boy, oh boy, do we have a good one for you today. We are going to talk about... Wait, did I say good one? Maybe good, maybe a little bit semi-tragic.
Yeah.
Enough with the dramatic.
Yeah,
That
exactly.
rhymes.
We just have to be positive about these things, right?
I mean,
these things are
laugh.
kind of hitting you left and right. So the media makes it look like doom and gloom. So we might as well just try to...
Okay, so today we're going to talk about the evaporation of homeowner equity. A recent article just came out, and it stated that $1.3 trillion of equity have evaporated from homeowners' newly found equity. Basically, the boom since 2020 that created all this, it has a retraction of $1.3 trillion already just in the last 3 months.
That's a lot.
That's gnarly.
I think you could go circle around the world. I don't know how many times. You know, in $100 bills.
You sewed together
Correct?
dollar to dollar.
Yeah, like I don't
Make
know
a
how
belt
many
around the
times.
planet.
But I saw something interesting just because I believe, it's just great. But yeah, and the cool word that they used was evaporate, right? Like, we didn't feel it. So what that actually meant, Andy, was, for the regular consumer here, so we can understand it in our terms, it's the way I actually understand it, is pretty much what they're saying. Every homeowner lost a minimum of $30,000.
On average, yep.
On average is what it is.
And higher in the higher cost areas and lower in the lower cost areas.
Well,
but
of course.
That's a lot.
But that sounds good.
$30,000
$30,000 is not a lot.
Yeah.
You know what I mean? But obviously, if we're really looking at the numbers here in San Diego, obviously it's one of the highest cost of living places, home values. Medium sales price last I checked was 700. No, 800.
No, it wasn't 800.
820,000.
Yeah. It was,
820.
yeah, it wasn't in the sevens anymore.
So
subtract
30,000.
Yeah. So I like how in the article it says buy about 30,000. Like buy about, that's still a lot of money.
That's
so a couple things I wanted to mention. This was the Q3 reading, and this of course tracks well with some of the Fed rate hikes that happened, which of course influenced the mortgage market. And we've seen mortgage rates increasing since January throughout the whole year, all the way up to now in November. And this basically charts the same course of the correction that we've been talking about, where it's going to ease up. There's going to be some softening, and rate pressure is going to cause price pressure. Price pressure squeezes out equity. So there you go.
And as you can see, he has all the answers.
So here's the thing I would have to say I did not like about the article. I want to say this is they made the connection to 2009. And I'm like, why do we got to talk about 2009? It was rough. But I understand statistically what they're talking about. It's the largest quarterly decline on record by dollar value, and the largest since 2009 on a percentage basis.
On a percentage.
Okay, fine. On a percentage basis. Now here's the good takeaway. Equity had on average 46% gain over this same period we were talking about over the last year and a half to 2 years.
Correct.
So even though there's been this evaporation of some equity, that was based off of a 46% equity gain.
Yeah.
Still tons of equity left. I think that's the positive takeaway here, despite the 2009 reference.
Yeah, I like that they put the percentage, because we know in 2009 values just went it was crazy.
Nosedive.
It was like a roller coaster. It was just going. Right now we don't see that. It's not happening. You know?
And there's evidence for that, because even in the article it talks about how in September the median home price decline was 0.52%. It wasn't 5%. It was 0.52. So I want to tell you and everybody else watching a couple things I thought, and you tell me what you think about this. So why not more and why not faster? Ultra low rates were secured in 2020, 2021. So for some people, they're like, well, why should I move? Therefore, less inventory. Those houses are not going to be subject to price decline. Item one. Item two, people who wanted to move, most of them have already done it. Yeah. So there's less inventory for that purpose as well.
Let me correct you there. I just had a client email me. They have their PCS to Virginia.
Okay, yes.
And their thing is, I want to keep my home.
Good.
And they're like, Will, how do I do that? So I'll talk to them later today. As we all know, you could only have one VA loan. You could only have one VA. VA loans do not have any limits anymore, any null amount limits, when you don't have one outstanding.
Correct.
Once you go and you have your VA tied up, then that county loan limit comes to play.
Triggers,
It triggers, right? So Virginia, we'll have to see what he owes here, where he's going on Virginia is just a different number.
See how much eligibility is left.
But to your point, because he flexed that, well, you refinance me at 2.25.
Yeah.
You know, I don't want to lose that home. Well, why would you at times?
So check this out. You don't know that you're running into like the final point of this, which is actually both, right? So I'm arguing, the point that people have low rates and they don't want to move because they got in 2021. And also you're saying, hey, but people are moving because they're PCSing. So who's left is high quality owners
there we go,
who are moving to another house or state long-term or permanently. That would be the case for the PCS folk coming to San Diego, leaving San Diego. And I think that is where there's still some saturation of buyer interest and some inventory that has to come on the market for those folks.
That's correct. Yep. I mean, hey, that was this morning getting that email. Yesterday, I get another call of another client. Hey, I have a ton of equity right here. What do I do? Do I rent this property out? Because it sounds so good, right? It sounds so good. Like, let me rent this out and let me, now how do I figure out to get the money? And I have to ask them, well, what's in your savings? You know, because now you're going to require, and if you don't want no mortgage insurance, this is not a veteran, you know, and so this is regular conventional. We all know you have to put 20% down in order to avoid mortgage insurance. So Andy, their whole concern was like, well, how do I come up with the average house is about $450? We already know that's going to be about $80,000 plus your closing cost. Do you have that? And so they were already stressing out. So I said, well, then you may want to look at selling here, go and transition there, have extra money in your bank account, and you know, go from there.
Yeah, and I think that's a great example of us living in situational times where, you know, people are not going to be making the decision because the market's great or the market's in their favor or the money is cheap or it's going to be highly situational to the circumstances that they find themselves being confronted with. So I think that's kind of like the takeaway for me as far as like, equity is going to do what equity is going to do. House price is going to change. But right now, people who have a financial move they need to make next year, they got to get ready now. And people that have a physical move they got to make, start asking those questions today.
That's it. Exactly.
Start asking.
Exactly. And I you know, everybody has a different situation. This is family. Sometimes the moving factor is, well, you know what? Hey, I already did good. Let me move closer to family. That's more important. Yeah. Because we already know a big house, you know, in Thanksgiving and not having people there, it means nothing.
Right.
You know, you want that,
of course,
that big old dining room when you have the table with like 20 people for 20 people.
Spending time together.
I've seen those actually. It's pretty crazy. But, you know, you see them as like for 10, 12 people. It's like, and then you can't share with anybody. It's just their decorative purposes or to fill in the space.
Hey, if we go to a big dinner together this year, I'm just going to call you from the other end. Or FaceTime you from the other end of the table.
You got too many people, Andy. No, but that's something we can do.
So look, there are still a bunch of you watching this that have equity right now, and maybe you have not seen the equity drop in your specific neighborhood because your neighborhood is still propped up heavy with value, and that's really good. Even if you still have a low in the 2s or 3s interest rate on your primary loan or your first, there's still an option of a HELOC. I know we're still talking about ADUs with people. Looking to add revenue streams to their property, convert the garage, do all sorts of things. So remain creative because the industry is going to have to get more creative because there's this tightening happening and we got to stay on our toes.
I tell you, all this ADU, all this other stuff is just fun stuff, you know? The good thing is real estate is still happening. It has slowed down and it happens, you know? These are cycles. We're expecting it. We're in a 12-year great cycle, Andy.
Oh, yeah.
You know, and the norm is usually what they say is like 10 years good and another, 4 or 5 years we're off, you know? And it's not an off where it's crazy off bad, you know what I mean? It's, this isn't just a big correction. Sometimes we need those.
Well, we happen to come off of like this trough of 2009 and 10 where it really was bad and the industry had a lot to do.
Correct.
Separate comment. But that trough that has led us to this point, and there's going to be some correction. We're seeing that correction and it's totally fine because it's still leaving a ton of room for people at the top. There's tons of equity left. So I want to make sure that we're acknowledging that despite it looking like, oh my gosh, panic, 1.3 trillion. I don't even know how to write that number. Like,
that is correct. There's a lot of good things. The good thing is, on average, not only do people lose about 30,000, Andy, it mentioned that on average, people have the highest equity, which is about $92,000.
Yes. Yeah.
You know, so I think it's a good balance right there. You know.
Yeah. So stay vigilant, stay aware, be what I'm trying to say, like be clear about your financial situation, correct. Understand it, and be honest. Be honest about your financial situation. Yeah. Call a spade a spade. If you're struggling with something, let us know. Yeah. If you're winning, you know what? Let us know that too. We'd love to hear the wins.
We want to know.
Put the wins in the comment.
Exactly.
Text Will. Yeah. Let him know how you're winning right now.
Especially my ADU people, right? They're actually. They call me. Some of them were actually very emotional, Andy, because they're like, sure, man, if it wasn't for that, I wouldn't just be being able to just chill out at home and enjoying it, you know?
Yeah.
They're not as stressed out as a lot of other people I see that are pretty stressed out, you know? And so, yeah, it's just how you play the game. It's who you're surrounding yourself with in order to just get you to that next stage in your life.
Well, this was a good one. I wanted to talk about this, so thank you for saying, like, this is the one we're doing. I was like, this is perfect.
Yeah. So and we just got to let people know, you know, and then here's the other differences. Right now, there was another article where they were saying that the American dream, right? Now it's actually an American dream for people where 3-4 years ago, it just seemed like everything was possible. Everybody could be a homeowner.
Right. Well, so there's another growing conversation that's not being given a lot of presence right now, which is the vanishing of the entry-level starter home.
Yeah, correct.
That is something that we'll have to tackle later, but there just does not seem to be an appetite for developers and builders to want those. Yeah. You see the consolidation of dense, more urban-like cities happening, or buildings happening even in suburban areas. And you see, you know, I'm not completely sold on it yet, but there's some data coming out already that like millennials want the adventure and they want to travel. And I see even some people used to work for me before where I'm like, they're younger and they're like, I'm living in a van right now, traveling the country, loving it. I'm like, okay, but it's not just like 1 or 2 or 3. I'm like, okay, now I know like 10 people who are just traveling in motorhomes.
It's that new show, Tiny Homes, Andy.
Yeah, totally. So I think obviously there's some changing and there's some trends, but you know, the developers not being able to bring to the market some entry-level homes, I think is also part of the growing problem we're going to have to address later.
Yeah, because, I mean, we haven't seen, when's the last time we've seen a 300, 350? When we hear that number, it's like, good luck, right?
That trough of 2009.
So, so seeing these numbers and this correction kind of brings us hope back that maybe we're not going to go as low as that, but at least we can see, you know, something change.
Yeah.
It gives that optimism that, all right, we're going to get into a home.
Well, I think this was a good conversation today. It's a good topic. We're going to continue bringing more topics to you guys. If there's something specific we have not yet talked about that you want us to address, give some opinion about. Remember, you got 16 years of individual experience. We'll combine that for 32. Let's not go further than that because I'm already bald. Yeah. And I want to get any older. But if there's something you want us to talk about, let us know. And we're going to continue this series all the way throughout this year. And then, surprise, surprise, announcement, we're going to have a new look in 2023, which I'm telling you now because by the time we get to Thanksgiving, y'all going to be distracted. So I'm letting you know right now, new look in 2023. It's going to be awesome.
That's it. So, hey, this is the month of being thankful and grateful.
Yes.
So enjoy your family. The seasons are starting to come, the season holidays. So enjoy them. This is what it's all about, right, Andy?
Absolutely.
And so giving back to Mortgage Heroes, your Mortgage Heroes family, is give us your feedback.
Yes.
Let us know what you guys want to hear, because really this is about you guys. I know we're thinking what's best for you, but at the same time, we want to know what you feel is best for you.
Right.
And for what, you know, an audience. So we really do appreciate you. We're so grateful for you guys. We wouldn't be in this position if it weren't for you.
Right.
You know, if it weren't for you guys referring us, I constantly get those. So I'm so grateful and I'm so appreciative. And, you know, Andy, one thing that I do mean is once they meet with me, it's like, it's going to be family.
Yeah.
And, you know, I strive to make sure that that is the case. So no matter what question it is, sometimes they're asking about car loans, whatever I know, whatever experience I have, I want to make sure we're giving that back.
Share it. Yeah.
And I know you're the same way, you know, especially in this month of giving.
Yeah. Well, there's no reason for me to sit on this knowledge and information I can share to help people and then not help them. That doesn't make any sense.
So you're not afraid of scarcity.
I'm not afraid. No scarcity. No scarcity mindset.
Same.
Yep.
Same.
So thank you guys for watching. We will see you again next week. Yeah.
That's it. Next week we'll do it again.
All right. Signing off. See you later.
Bye.